What you're about to hear might sound impossible. Gold buyers across America have less than 24 hours to make a decision that could define their financial future for the next decade. And I'm not being dramatic here. The window is closing faster than most people realize, and the consequences of missing this moment could be devastating for anyone who's been sitting on the fence about precious metals. Let me paint you a picture of what's happening right now in the gold and silver markets, because what you're seeing on the surface is nothing compared to what's brewing underneath. While mainstream financial media keeps telling you everything is fine, there's a silent war happening in the precious metal space that most investors have no idea about, and the clock is ticking. Here's what nobody's talking about. Silver just experienced one of the most violent price swings in modern history. After more than doubling throughout last year and surging over 50% in a single month, the metal crashed by nearly 30% in a single trading session. Think about that for a second. 30%. In one day. That's not normal market behavior. That's the kind of volatility you see when something fundamental is breaking in the system. But here's where it gets interesting. While everyone was panicking about the crash, something else was happening that the smart money noticed immediately. Central banks didn't stop buying. In fact, they accelerated their purchases. The People's Bank of China, the Reserve Bank of India, the Central Bank of Turkey, they all kept accumulating gold like their lives depended on it. Why would they do that if precious metals were truly in trouble? Before we go any further, I want to make sure you have access to something that could change everything for you. I've put together a free guide that shows the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's in the description below. Grab it while you're thinking about it, because what I'm about to show you is going to make you want to take action immediately. Now let's talk about what's really driving this urgency. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, along with their expanding alliance of countries, are actively working to create an alternative to the US dollar for international trade. This isn't conspiracy theory anymore. This is documented policy. They're building the infrastructure right now. And at the center of their plan, gold-backed trade settlements. Think about what that means for a second. For decades, the entire global financial system has run on one thing: confidence in the US dollar. Every barrel of oil, every international trade deal, every central bank reserve, it all flows through dollars. But what happens when the world's largest economies decide they don't want to play that game anymore? What happens when they start settling trades in their own currencies, backed by physical gold? The answer is simple. The dollar loses its privileged position. And when that happens, all those trillions of dollars that have been sitting in foreign reserves around the world suddenly need somewhere else to go. Where do you think they're going to flow? Into assets that can't be printed, into assets that have held value for 5,000 years, into gold and silver. But here's the part that should terrify anyone who's been waiting to get into precious metals. The physical supply situation is getting critical. I'm not talking about paper contracts on the COMEX. I'm talking about actual metal you can hold in your hand. The premiums on physical silver coins and bars have been climbing steadily, and delivery times from major dealers have been stretching out. That's not a sign of a market in decline. That's a sign of a market where demand is overwhelming supply. Let me tell you a story that illustrates exactly what's happening. Back in the 1970s, there was a man named Nelson Bunker Hunt. He and his brother tried to corner the silver market. They accumulated so much physical silver that they literally couldn't find enough metal to satisfy their buying. The price went from around $6 an ounce to over $50 in just a few years. Now, I'm not saying we're going to see that exact scenario play out again, but I am saying that when physical supply gets tight in the precious metals market, prices can move in ways that shock everyone. And right now, we're seeing something even more powerful than the Hunt brothers' corner. We're seeing entire nations accumulating gold. We're seeing central banks buying at record levels. We're seeing industrial demand for silver hitting all-time highs because of the green energy transition. Solar panels need silver. Electric vehicles need silver. The technology revolution runs on silver, and we're mining less of it every year while demand keeps climbing. Here's where the 24-hour deadline comes in. Major financial institutions are repositioning right now. The smart money isn't waiting to see what happens next. They're moving into position before the crowd figures out what's going on. And once the crowd catches on, once mainstream investors start piling into precious metals, the premiums are going to explode, the availability is going to dry up, and the prices are going to gap higher in ways that leave latecomers scrambling. I've been watching the precious metals markets for years, and I've never seen a setup quite like this. You've got technical factors, fundamental factors, and geopolitical factors all aligning at the same time. It's like watching three different storms converge into one massive hurricane, and most people are still sitting on the beach wondering if they should pack up their umbrella. Let's talk about the technical picture for a minute, because this is where things get really interesting. Gold has been consolidating in a range, building energy like a coiled spring. Every time it tests resistance, it holds. Every time it pulls back, buyers step in. That's not the behavior of a market that's ready to collapse. That's the behavior of a market that's getting ready to break out to new highs. And silver? Despite that violent shakeout, it's already recovering. The resilience is remarkable. Think about what that tells you. After a 30% crash in a single day, the metal bounced back and started climbing again almost immediately. That means there are buyers waiting at every level. That means the demand is real. That means the fundamentals are so strong that even a massive technical breakdown can't keep prices down for long. Now, I want to talk about something that most people don't understand about the gold and silver markets. The paper market and the physical market are two completely different animals. On the COMEX, you can trade contracts representing thousands of ounces of metal without ever touching a single coin. Banks and hedge funds use these contracts to speculate, to hedge, and yes, to manipulate prices. But here's the thing. Paper contracts are only worth something if you can actually get delivery of the physical metal when you want it. And that's where the system is starting to crack. The ratio of paper claims to physical metal has been growing for years. Some estimates put it at over 100 paper ounces for every physical ounce available for delivery. Think about that. If even a small percentage of contract holders decided they wanted physical delivery instead of cash settlement, the entire system would seize up. There literally isn't enough metal to satisfy all the claims. This is exactly what happened in the nickel market not too long ago. The London Metal Exchange had to halt trading and cancel trades because a short squeeze threatened to bankrupt major players. The same dynamics exist in precious metals, but on a much larger scale. And when that squeeze happens, when the paper market finally breaks and people realize they need physical metal, the price discovery is going to be absolutely explosive. Here's another angle most people miss. The mining industry is in trouble. It takes years to bring a new mine online. Exploration budgets have been cut. Environmental regulations have gotten stricter. Energy costs have soared. All of this means that even with higher prices, we're not going to see a flood of new supply hitting the market anytime soon. The supply response that normally caps commodity prices just isn't there this time. And on the demand side, you've got forces that have never existed before. The green energy transition alone is going to require massive amounts of silver. Every solar panel needs about 20 grams of silver. Every electric vehicle needs about 30 grams. Multiply that by the millions of units being produced every year, and you start to see the scale of the problem. We're talking about industrial demand that's structural, not cyclical. It's not going away when the economy slows down. It's only going to grow. But let's bring this back to what matters for you personally. Why does any of this matter if you're just trying to protect your retirement savings and make sure you have something solid to pass on to your kids? Because everything I just described adds up to one simple conclusion. The purchasing power of paper currency is under assault from multiple directions at once, and precious metals are the oldest, most reliable defense against that assault. Think about your retirement account for a second. If you're like most Americans, you've got money sitting in stocks, bonds, maybe some mutual funds. All of that is denominated in dollars. All of that depends on the continued stability and strength of the U.S. financial system. Now, I'm not saying the system is going to collapse tomorrow, but I am saying that the risks are higher than they've been in decades, and the traditional diversification strategies might not be enough this time. This is actually a perfect moment to mention something important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I've put together a comprehensive guide that covers exactly how to get physical gold into your retirement account without triggering tax penalties. It's in the description below. This isn't about speculation or trying to get rich quick. This is about protecting what you've already built from the monetary chaos that's unfolding around us. The guide walks you through the entire process, shows you the pitfalls to avoid, and gives you the information you need to make an intelligent decision. Worth checking out if this is relevant to your situation. Now back to why the next 24 hours matter so much. We're at an inflection point. The precious metals market is coiled tighter than I've ever seen it. The fundamentals are screaming higher prices. The technical setup is primed for a breakout. And the geopolitical backdrop is more supportive of gold and silver than at any time since the 1970s. But here's the thing. Markets don't wait for everyone to figure it out. They move when the smart money moves, and then everyone else chases. I've seen this pattern play out over and over again in my years of watching markets. There's always a moment, a brief window, where the opportunity is obvious to anyone paying attention, but the crowd hasn't caught on yet. That's where we are right now with precious metals. The people who understand what's happening are positioning themselves. The people who are waiting for more confirmation, waiting for prices to break out, waiting for the mainstream media to tell them it's safe. Those people are going to end up paying much higher prices for the same metal. Let me give you a historical parallel that might help this sink in. In 2008, when the financial crisis hit, gold was trading around $800 an ounce. People were scared. The stock market was crashing. Banks were failing. And gold? It pulled back initially, just like everything else. But then something interesting happened. As central banks around the world started printing money to bail out the system, as governments ran massive deficits to stimulate their economies, gold started climbing. And it didn't stop until it hit $1,900 3 years later. The people who bought gold in late 2008, when everyone was panicking, they more than doubled their money. The people who waited until gold was already at $1,500, until it was obvious to everyone that precious metals were the place to be, they still made money, but they missed the biggest gains. And the people who waited until gold hit its peak and then bought because of FOMO? They spent years underwater. The lesson is simple. The best time to position yourself in precious metals is when the fundamentals are screaming, but the price action hasn't confirmed it yet. That's where we are right now. The fundamentals couldn't be more bullish. Central bank buying, BRICS de-dollarization, supply constraints, industrial demand, monetary instability, it's all there. But prices are still consolidating. They haven't broken out to new highs yet. This is the window. And here's why it's closing so fast. The market is watching the same things I'm watching. Professional traders, hedge funds, family offices, they're all seeing the same setup. They're all positioning for the same move. And when enough of them decide to pull the trigger, when enough capital starts flowing into precious metals, the move is going to be fast and violent. You won't have time to think about it. You won't have time to do more research. You'll either be positioned or you'll be chasing. Now, I want to address something that might be going through your mind right now. You might be thinking, but what about that crash in silver? Doesn't that prove the market is unstable? Doesn't that mean I should wait? And I get it. That kind of volatility is scary. But here's what you need to understand. That crash wasn't a sign of weakness. It was a sign of strength. Think about it this way. Silver had just surged over 50% in a single month. That's an unsustainable move in any market. It needed to correct. It needed to shake out the weak hands, the speculators who were just along for the ride. And when it did correct, when it crashed 30% in a day, what happened next? It bounced. Hard. Because the real buyers, the people who understand the fundamentals, they saw that crash as a gift. They saw it as an opportunity to accumulate more metal at better prices. That's how bull markets work. They don't go straight up. They climb a wall of worry. They shake people out. They make you doubt yourself. And then, when everyone's given up, when everyone's convinced the move is over, that's when they explode higher and leave everyone behind. I've been in this business long enough to recognize the pattern. And right now, we're in the shakeout phase. We're in the part where the market is testing your conviction. It's asking you, do you really believe in this? Or are you just here for a quick trade? The people who answer that question correctly, who understand that this is about protecting wealth over the long term, not making a quick buck. Those are the people who are going to come out ahead. Let's talk about what happens next, because this is where it gets really interesting. Assuming you decide to take action, assuming you decide that precious metals need to be part of your wealth protection strategy, what should you expect? First, understand that this isn't a get-rich-quick scheme. This is insurance. This is a hedge against monetary chaos. This is a way to make sure that no matter what happens to the dollar, no matter what happens to the stock market, no matter what happens to the banking system, you have something real, something tangible, something that's held value for thousands of years. Second, understand that the journey is going to be volatile. Gold and silver don't move in straight lines. There will be days when you question your decision. There will be corrections that test your resolve. But if you understand the fundamentals, if you understand why you're holding precious metals in the first place, those corrections won't shake you out. They'll just be noise. Third, understand that timing matters, but not in the way most people think. You don't need to catch the exact bottom. You don't need to be perfect. You just need to be positioned before the major move happens. And right now, with everything I've laid out, with all the factors aligning, we're as close to that major move as I've seen in years. Here's something else to consider: the opportunity cost of waiting. Let's say you decide to hold off, to wait for more confirmation, to see what happens over the next few weeks or months. What's the best case scenario? Maybe prices pull back a bit more and you get a slightly better entry. But what's the worst case scenario? Prices break out, premiums explode, availability dries up, and you end up paying significantly more for the same metal. Or worse, you can't get it at all. Is that risk worth taking? Is saving a few percentage points on your entry price worth potentially missing the entire move? I don't think so. Not when the fundamentals are this strong. Not when the setup is this clear. Not when the window is this narrow. Now, I want to talk about something that doesn't get discussed enough in the precious metals space: the psychological aspect of holding gold and silver. Because here's the thing: when you own physical metal, when you can hold it in your hand, when you know it's sitting in your safe or in a secure vault, it changes how you think about wealth. It grounds you. It gives you a sense of security that paper assets just can't provide. I've talked to countless people over the years who've made the transition from being fully invested in traditional assets to having a significant portion of their wealth in precious metals, and almost universally, they tell me the same thing. They sleep better at night. They worry less about market crashes. They feel more in control of their financial destiny. Because they know that no matter what happens, they have something real, something that can't be inflated away, something that can't be hacked or frozen or confiscated with the click of a mouse. That peace of mind is worth something. It's worth a lot, actually, and it's something you can't put a price on. But you only get it if you take action. You only get it if you make the decision to protect yourself before the crisis hits, not after. Let me tell you one more story, and then I'll wrap this up. I know a guy, let's call him Robert, who spent his entire career building a successful business. He saved diligently, invested wisely, did everything right according to conventional financial wisdom. He had a diversified portfolio of stocks and bonds, a healthy 401k, real estate, the whole package. And then 2008 happened. Robert watched his portfolio get cut in half. He watched his real estate values plummet. He watched his retirement dreams evaporate. And the worst part? He felt helpless. He felt like he had no control over what was happening to his wealth. Everything was tied to the system, and when the system broke, he broke with it. After that experience, Robert made a decision. He decided that never again would he be completely dependent on the financial system for his security. He started accumulating gold and silver, not as a speculation, not to get rich, but as insurance, as a hedge, as a way to make sure that if the system broke again, he'd have something solid to fall back on. Fast forward to today, and Robert's one of the calmest, most confident investors I know. He's not worried about market crashes. He's not worried about inflation. He's not worried about bank failures or currency crises, because he knows he's protected. He knows he has real wealth that can't be destroyed by monetary policy or financial engineering. That's what I want for you. That's what this is all about. Not making a quick profit on a trade, not trying to time the market perfectly, but building real, lasting security that can weather any storm. So here's where we are. You've got less than 24 hours to make a decision, not because the world is ending tomorrow, not because gold and silver are going to disappear, but because the window of opportunity to position yourself at favorable prices, with reasonable premiums, with good availability. That window is closing fast. The smart money is moving now. Central banks are accumulating now. Industrial buyers are securing supply now. The question is, are you going to join them? Or are you going to wait until it's obvious to everyone, until prices have already moved, until premiums have already spiked, until availability has already dried up? I can't make that decision for you. Nobody can. But I can tell you this. In all my years of watching markets, I've never seen a setup quite like this. I've never seen so many bullish factors align at the same time. I've never seen such a clear opportunity to protect wealth before the crowd figures it out. The fundamentals are there. The technical setup is there. The geopolitical backdrop is there. The supply constraints are there. The demand drivers are there. Everything is pointing in the same direction. The only question is whether you're going to act on it. Remember that guide I mentioned earlier? The one that shows you exactly how thousands of American retirees are protecting their wealth right now? It's in the description below. And here's something special for those of you who've stuck with me this far. If you're an American retiree with at least $100,000 in any retirement account, and you mention that you watch this video all the way through, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just solid information from people who understand what's happening and can help you navigate it. This is your moment. This is your window. 24 hours from now, the opportunity might still be there, but it might not. The premiums might be higher. The availability might be lower. The prices might have already started moving, and you'll be left wondering why you didn't act when you had the chance. Don't let that happen. Don't be the person who looks back 6 months from now, or a year from now, or 5 years from now, and wishes they'd taken action when the signs were this clear. The information is in front of you. The opportunity is in front of you. The only thing standing between you and the security that comes from owning real, tangible wealth is a decision. Make it count. Make it now. And make it with the confidence that comes from understanding what's really happening in the world of precious metals. Because this isn't just about gold and silver. This is about protecting everything you've worked for. This is about making sure your retirement is secure. This is about leaving something real for your children and grandchildren. This is about taking control of your financial destiny before events take control of it for you. The clock is ticking. The window is closing. And the opportunity of a lifetime is staring you right in the face. What are you going to do about it?